Welcome to another snapshot version. It's still me, Christine, and we are still under the financial statements audit section. However, to finally put a cap on this, we are already putting the spotlight on audit planning itself. So, previously, we did make mention that there are a number of activities involved under audit planning, and in the last snapshot, we decided to put the spotlight on identifying and assessing the risk of material misstatement, also as an apt continuation to our previous discussion on the audit risk model. However, this time we're finally going to talk about the overall audit strategy and the audit plan as having drawn inspiration from PSA 300 that specifically states the auditor shall establish an overall audit strategy that sets the scope, timing, and direction of the audit and guides the development of a more detailed audit plan. Having said that, we can then envision that the audit strategy comes first, the audit plan comes next. Still, we have to differentiate what's the difference between audit strategy and audit plan. Think of the strategy as the broadest concept. It sets out in general terms how the audit is to be conducted. It talks about the scope, timing, and direction of the audit, such as, for example, in terms of the scope, what activities will be covered? How will the audit be segmented? Will we segment the audit according to line items or shall we segment it using the transaction cycle approach? Secondly, when will the audit be performed? Will the audit team be performing an interim audit or will it be a year-end audit? And in terms of the direction, what are the focal areas? Are there areas that need more audit attention, which is generally born out of the results of our risk assessment procedures and especially our analytical procedures as performed in the planning phase. Finally, the auditor will also determine what resources are needed. Is there a need for experts? Is there a need for a more seasoned audit team? And does the firm have those resources? So, having set these general terms, these broad strokes, the auditor will then determine the audit plan. The idea of the audit plan is that these are more detailed responses at the assertion level. So, let's lock that in our minds that when we talk about audit plan, we are talking in the language of the assertion level. And so, therefore, when we talk about the assertion level, we refer to account balances, transactions, and events, as compared with the strategy, which is at the broad or macro level. This time, we talk about the assertion level when we refer to audit plans. So, we think about nature, timing, and extent of the audit procedures, which would, of course, involve risk assessment procedures and further audit procedures to include tests of controls and substantive testing. Now, when the auditor establishes the overall audit strategy, the auditor considers the following things. The auditor must look into the characteristics of the engagement, including what's the financial reporting framework used? Is it PFRS? Is it PFRS for SMEs? Is the client using a special purpose framework? The auditor will also identify are there industry specific requirements? And what is the coverage? Are there branches? Are there components? And where are these located? Okay, the auditor will also look at the reporting objectives, including the reporting frequency and the deadlines that need to be met. What are the expected communications other than the audit report, for example? Determine as well the factors significant in directing your engagement team, including the materiality levels you have chosen or the threshold that you have chosen for the audit. Are there areas with a high risk of material misstatement? And will the auditor utilize a reliance or no reliance approach? So, when we talk about reliance or no reliance approach, we're essentially looking at does the auditor intend to rely on the controls or not? Because that will also drive your audit plan in terms of the extent of the testing that will be performed. Part as well of the consideration will be results of the preliminary engagement activities. So, if you would recall, determining, for example, your competence, your independence, your resources, and the integrity of the client. So, the results of your preliminary engagement activities will affect your overall audit strategy. And then, of course, the auditor will look at the nature, timing, and extent of the resources. How should the audit team be selected? Does this particular engagement require a more senior audit team? Is an EQCR needed? EQCR stands for Engagement Quality Control Review, which is, while something that we would be discussing in the Standards of quality management, we have to mention right now an EQCR, sometimes called a concurring partner review, is required for listed entities, where another partner, not part of the engagement team, will look at the judgments made and the conclusions reached. Are experts needed? And considering all of these things, how will the budget be affected? So, if you would notice, in terms of overall audit strategy, it's at the macro level, looking at the performance of the audit of the FS from a macro point of view. But once we head on over to the audit plan, then the audit plan will show us the responses at the assertion level. What procedures will be performed? What's the extent of these procedures? That's the audit plan. Okay. Now, if you really want to look into the more detailed set of instructions, for example, how would you audit cash? How would you audit accounts receivable? What is the step-by-step set of instructions? Then that must mean you have to look at the audit program. So the audit program contains a detailed set of instructions, so it's kind of like your guide while you are performing the audit. It tells you what to do. Like for example, step one, obtain a listing from the client and compare with. So that's your audit program. So in summary, when we talk about the strategy, it's the broadest. Audit program, on the other hand, is the most detailed as it already contains the specific set of instructions. All right. So in this instance, let's talk about direction, supervision, and review. I would like to think of direction as, if you can imagine, it's forward looking, it's giving out instructions. Supervision is together with, while the team is performing the work, are there any areas that needs consultation? Are there any conflicts that need to be resolved? And of course, review is when there is already work performed and the work of a less experienced member gets reviewed by a more experienced team member. So, in terms of direction, supervision, and review, it is affected by the size and complexity of the entity. Of course, needless to say, the more complex the entity is, the more close monitoring is needed. The area of the audit, okay, that is being audited, is it an area that poses a high risk of material misstatement? And of course, the capabilities and competence of the team members. Also looking into how seasoned or how new the members of the team are. So these are the items or yeah, the concepts that we need to refresh on when we talk about audit planning. So as we close this off, let us recall that when we talk about the financial statements audit, it can be performed using either the traditional audit or the risk-based audit. Of course, the risk-based audit is more preferred, where we said there has to be risk assessment, risk response, and conclusion. Okay, conclusion and reporting. And to this, we once invoked the audit risk model. However, looking into the financial statements, and the audit side, we are reminded that in terms of the financial statements are made up of assertions. Assertions are the claims of management. These are the stories of management. This is what management is trying to tell us. And these assertions, based on the PSA 315 2019 revision, are categorized into two. We have assertions relating to classes of transactions and events and related disclosures, and assertions relating to account balances and related disclosures. I have provided the suggested mnemonic, but you could always make use of your own, whichever one makes you remember these one better. Okay, in terms of the audit, well, whenever the client has assertions, whenever the client is saying something, the auditor gets competitive, right? And so therefore, the auditor comes up with audit objectives. Now, since the client has two categories of assertions, the auditor will also have two categories of objectives. And simply, the auditor will say, my objective is to test the assertions, but because I'm competitive, I'm going to add a few more. For example, in terms of transaction related audit objectives, the auditor will say, okay, I'll take the assertions. Those are occurrence, completeness, accuracy, cutoff, classification, presentation. Then I will add one more, which is posting and summarization. Under balance-related audit objectives, the auditor will also copy the assertions of the client, and then we'll add, in the case of balance-related objectives, three more. And we remember this one by the mnemonic CDR. So cut off, detail tie-in, and realizable value. So when the auditor puts forward his objectives, the auditor states it either in the form of general objectives or specific objectives. That's why sometimes you get to hear general transaction related audit objectives, specific balance related audit objectives. Simply put, when you talk about general objectives, you don't make mention of any specific account title. Say, for example, you just state that all transactions that occurred during the period have been recorded. That means to say that objective can be used for any account. You can use it for sales, you can use it for purchases, you can use it for expenses because it's generic. And because of that as well, that can be used from one client to the other client because again, it's generic. The general audit objectives. The other type of audit objective is specific. And when it is specific, then the specific account title that is tested is going to be mentioned. And in that case, that objective becomes locked to that specific account transaction or event. So these are the audit objectives in relation to the financial statement assertions. So from here, we get to see that the objectives follow the assertions. And to the objectives, in order for the auditor to meet the objectives, the auditor must perform audit procedures. So in the case of audit procedures, we have either RAP or risk assessment procedures and FAP or further audit procedures. Further audit procedures are further categorized into tests of controls and substantive tests. And substantive tests are further categorized into substantive tests of details and substantive analytical procedures. And to this, we say risk assessment procedures are required, tests of controls are not required, and we will talk more about it in the next snapshot. Substantive tests are required, but in this case, only substantive tests of details are required. Substantive analytical procedures are not required. So we're putting this here because we have just talked about how the audit strategy is the guide for the more detailed audit plan. So the audit plan at the assertion level, and these are the assertions that will be considered by the auditor in coming up with the audit plan. So the moment that the auditor has determined nature, timing, and extent of both RAP and FAP, the auditor will also come up with an audit program, which will detail the instructions on how to test a particular account. Okay, having said that, we are also reminded in terms of substantive tests of details, it could either be substantive tests of details of balances, or substantive test of details of transactions. Because again, when we look at the assertions and the objectives and nature, timing, and extent of the testing, it refers to both balances and transactions. So having said that, that is our snapshot that completes our financial statements audit overview. Once again, good job everyone for staying until the end of this video. You may head on over to the next one if it's already available, or you may answer some MCQs to help you apply the concepts that we have just reviewed. I hope to see you in the next snapshot.